So if you've read any of the Malcolm Gladwell books, you know they're pretty good, and he writes some pretty good books, and they're bestsellers and all that. And one of the guys that he featured in the book Blink was named John Gottman. Now, John Gottman's actually a well-known psychologist. I had heard about him years ago, before Blink. Blink was a great book, by the way. But what's interesting about Gottman, I think he's in Washington State, and what he does is he will listen to couples talking, and generally speaking, within about a couple of minutes, usually within 15 minutes or so, he can work out whether or not they're going to stay together or whether or not they're going to split, basically, in the future, sometime in the future, usually about 6 years in the future is what they, and he has like a 94% success rate. And not only that, but he's taught his students how to do the same, how to also see whether or not they're likely to keep going, whether or not these couples are more likely to split or to keep going. And what's interesting is I think you can do the same thing with your trading. In other words, I think there are certain things that you can look at, and if you look at them really carefully, you'll have a pretty good idea of whether or not you are going to succeed as a trader, whether or not you're going to reach the goals that you want to reach. So I thought that this would be a good opportunity for us to go over those, and you can have a look and see what's important, okay, as a trader, what's important to look at. So let's first, what I want to give you is this thing called the ratio, okay? So on my screen here, you should see, I'll share my screen so you can see it here. So you can see what's going on here, right here. There we are. Alrighty. So on my screen here, you should be able to see, let me just merge these cells. Yeah, okay, cool. Not exactly like, I usually hire people to do my Excel work, my Excel dirty work, because I believe in hiring people who are better than you at doing things that you aren't good at. And Excel is definitely not one of my strongholds. But this is what it's called. I call it the trader ratio, right? And essentially, it's very easy it's very simple to create the trader ratio. What you do is you get the sum. Here, I'll merge this cell here. You get the sum of all of your winning trades, right? And you get the sum, and then you get the largest loser, basically. And this is a super cool way of seeing whether or not you are likely to make it as a trader. So let's say, for example, and you could do this with your back testing too. Like let's say you're running through in Forex Tester, you're doing a strategy or strategies. You can aggregate those data, and what you want is the sum of all your winners. So not the sum of your wins minus your losses. A lot of times we look at that to see what the overall profitability of the system is, but you're actually just looking at all of your wins. So let's say the sum of your wins is something like $803,722, right? So 803,722. Okay, and we'll make that dollars and cents because it should be dollars and cents, of course. Boom. All right, and then let's say that your largest loser. This account had grown quite a bit. So let's say that your largest loser was like $9,000 or something like that. Oh, and we'll format the same. Yeah, look at that. Let's say your largest loser was $9,010. Okay? And so what you do then is you just simply find out what that ratio is. Okay? And so I will, so then you go this number right here, which is all of your wins, divided by your largest loser right there, right? And actually that should be a number. That shouldn't be dollars and cents, so to speak. That should be a number. So we'll just do number like that. And we'll make it a bit bigger because it's an important number. Now, in this case, it's quite good, right? It's 89.2. That's good. Really, the bare minimum you will get by with is going to be 6. I liked it to be in the teens at the very least. Now this is a really good number, obviously 89. And if you trade a system for a long time or have a lot of trades under your back testing, then it's going to be a big no. Ideally, it's going to be a big number. But if this, see what would happen here if I had a largest loser of, let's say, $112,000 and 899 or something, right? Well, that would pull that down to 7. It's still acceptable, but not by much. And if this number were $135,421, you can see here now we're below 6. So that's the bad news, right? So again, to get your trader ratio, all you really do is you get the sum of your wins. Ideally, it's live trading. If it's not live trading, then you want to use your Forex tester data. Forex tester is a simulator that you use. You can get if you don't have it, you can get a Forex tester discount actually at fxjake.com/tester, and they will give me a few bucks for that. I think it's like $30 or $50 or something if you buy it through my link. But you also save like at least $50 by getting it through that link. So that's where you can get Forex tester. Okay. And it's really good to get your stats, get used to a system, build up your confidence, that sort of thing. So that is the trader ratio, okay? So that's number 1. So that was the first thing I want to share with you. If you're trying to establish whether or not you think you'll do well as a trader, whether or not you will, quote, make it, that's the first thing you want to look at is, do you have a strategy that will work, right? Now let's move to something else. And let's move to a different aspect of this. The other thing that I want you to think about is, if I go to fxjake.com/risk, I am going to go to my risk calculator here. So the first thing is, does my system make money, or is it good enough, basically? And that is answered through the trader ratio. Number 2 question you want to ask is, am I going to hit my catastrophic drawdown level? Now, that's just a fancy schmancy way of saying, am I going to quit? Because we all know as traders, the thing that we run into is, the problem we run into as traders is quitting and running into difficult times. That's really the tough thing. It's not so much, going for a goal and trying to achieve a certain amount of profitability or a dollar level or whatever. Like, for example, we're going to do in our upcoming course, the Small Accounts, Big Profits, we're going to go for a 300 trade target. We're looking to make 100 grand over 300 trades, right? Or 99,000 over 300 trades, basically. And that's the goal. So the question becomes, when you start trading, like, where do you draw the line and say, well, that's too much, like the drawdown is too steep. I'm not going to have staying power if I run into trouble. If I hit this level of drawdown or this losing streak gets this bad, I'm probably going to stop. So we all have a number. You may not be aware of what that number is, but this calculator here will share with you how you can figure out that number. So in this video here, you will see how to use the calculator. It walks you through it. And let me just give you a quick example of what this looks like. So let's say, for example, I have a 52% win rate strategy, and my strategy makes 2 to 1. So reward loss ratio. So I have a 52% chance of a win. I am getting $2,000 for every $1,000 I risk. And let's say that I'm going to risk 2%. And I always put 10,000 in here, right? So you put 10,000 in here. We go, over the next 10,000 trades, what is my risk of a 20% drawdown? Because I think if I hit 20%, I'm gonna be in freak out mode. And then I hit calculate here. And you can see what happens is I have a 99.1% chance of hitting that 20% drawdown. So in other words, I'm gonna hit the freak out button. I'm gonna say that the markets have changed. So the two things that traders say are the markets have changed, or my system's broken, basically. So you blame the system or you blame the markets, But really the reason why we're in freakout mode is because we've hit that drawdown level. And believe it or not, it's under our control. So all I really have to do here, assuming, now this calculator all assumes that you use fixed fractional risk management. Most traders do. Most futures traders, most Forex traders, most CFD traders, spread betting. If you're doing that sort of trading, if you don't know what that is, spread betting is, don't worry about it. That means you probably live in the US or Canada. Then what that means is I am not going to, I know that I can change my risk, my fixed fractional risk, my risk per trade, and change the likelihood of hitting that certain drawdown. So if I drop my risk per trade down to 1%, remember I'm keeping everything the same here. I still have a 52% win rate. I still have a 2-to-1 reward risk ratio. It's the same strategy. All that's the same, but I just cut my risk, and now look, I've got a 98.7% chance of avoiding it. If I calculate again, a 98.3% chance of avoiding it. And for a lot of 99.2% chance, every time you hit calculate, it's going to change 99.1% chance of avoiding it. The reason why it does that is it runs Monte Carlo in the background, so it's running through it 10,000 times, literally in the background, and giving you what that percentage likelihood is. Obviously, if I wanted to get it right down to zero, I'd probably have to go 0.8%, or maybe even 0.9% per trade, and that's probably almost going to get me there. Looks like I'm at 99.9% chance if I, there's 100%. So I'm going to be right around 99.9% chance of avoiding that catastrophic 20% drawdown given these parameters. Now, obviously, you might be thinking, well, why don't I just change the strategy? Well, if you change the strategy, that's fine, but you've got to do your testing all over again. You've got to run through your 600-700 trades in Forex Tester and all that, right? I mean, that's part of the deal. So that's how it works. I have to get more data. I can't just say, well, I'll just go for 3-to-1 because your probability won't hold up. If you try to go 3-to-1, what will probably happen is, let's say you go 3-to-1, you might end up down here at 37% win rate, right? And I go 3-to-1. And so now if I'm risking 0.8%, look what happens. Am I going to hit my 20% drawdown? Yeah. I've got like a 22% chance. So I've only got an 80% chance of missing it, which for a lot of traders, that's not enough. So as my win rate as I pull my win rate down, even though my reward risk ratio is going up, it still will improve the chances basically of a sequence of losing trades in a row. And that's why that drawdown likelihood is going up. So I'm going to have to probably go down to 0.5% or something like that. Let's see here. There we are. Okay, so is that making sense? Yeah? So that's essentially what we'd be looking at if we were to use the risk calculator to figure out our catastrophic drawdown level. So a lot of times you will hear traders say, "Oh, well, I could do with a 30% drawdown." Remember, if you're trading 200 grand and you have a 30% drawdown, that's 60 grand that you're down. So you have to sometimes put it in dollar values just to establish what would that feel like, right? So with a 0.5% here, I'm probably going to be okay. I got a 99.9% chance of avoiding that 20% drawdown given the system parameters, 99.5. So that's pretty good. You might drop it down to 0.4% or whatever, but basically that's going to get me in that range. All right. So now what I want to do here is I want to share with you the third thing that I wanted to talk about today, which is basically the goals, what you're trying to achieve as a trader. So we talked about, number one, we talked about making sure that your system's okay, and that was the trader ratio. It's a quick and dirty way to check that. We want to make sure that our risk is okay, right? Which is this right here, this drawdown calculator, the risk calculator, figuring out, am I going to hit that catastrophic drawdown level? And then finally, what we want to do here is we want to go, okay, well, what are my goals? Like, what am I trying to get here? What am I trying to achieve? And the best way I know how to do that is to run Monte Carlo tests like this one here in a spreadsheet like this. So basically, all I'm saying is, let's say that I start off with 20 grand, right? Like this. Let's start off with a $20,000 account, and we'll actually keep the data the same as we had here. 37% win rate, 3-to-1 reward risk ratio. Now, if that number seems low to you, then you're probably trading a very low. Reward risk ratio system because you're trying to go for bigger profits, right? It says 1%. That's because it's rounding it, but it's actually 0.5%. Okay, so let me show you how you read this. So what's happening here is the market is the spreadsheet is telling me what's going on, like in terms of the account over the next 1,000 trades or whatever it is. I'm risking 0.5%, which, as you can see here, that's $100 on a $20,000 account. And if I win, I make $300, at least in the beginning. So, and these are random wins and losses. And the way that I get the random wins and losses, I'll show you. I go to random.org, like this. Oops. Random.org. That's where you can get a bunch of random numbers and you just pile them into the spreadsheet like that, right? So let's do it. So you go down to integer, randomize an integer sequence, integer generator, integer generator, okay. So I go, I want 1,000 numbers between 1 and 100, and it actually has it by 5 columns by default. I want it in 1, and I'll show you why. I go boom, and that gives me all of these numbers here. Now I'm going to select these numbers, and I'm going to paste them into the spreadsheet, but not yet because I want to show you what happens when we do this. When you first do it, if you just run one Monte Carlo test, that doesn't actually tell you what's likely to happen, right? That's not, that's not something that we know for sure, like, okay, that's what's going to happen, because that's just one possibility, one sequence possibility. So in this case right here, starting at 20 grand, the question is, where are we at after 300 trades, okay? So I'm going to go down here all the way down to trade 300, and in this case, it will tell us, I think it should be 302 actually, because I think we have 2 columns up there. So after 300 trades, we've gone from 20 grand to $42,131.69, right? Given the sequence of trades. So 42,131. Now let's put in, and at the end, we'll go down to the end and see where we were. So at the end, you can see, we're at $156,500, right? And the observed win rate was actually 35.5. It wasn't 37. So we didn't have quite the 37% win rate we were expecting. But that's okay. That obviously happens, right? Now I'm going to paste those numbers in again. So now we have a completely different sequence of trades, right? And I'm going to go down to trade 300 again. Remember, we had 42,131, if I remember correctly, right? And here we are. Look at that. Not as good. See? It's at $33,848. And at the bottom, we'll see where we're at. Well, it was at 150, right? The previous one. So after this one, it's a much better result, actually, in the end. We had a slightly better win rate, although it looks like the wins were more later on after 300 trades, and we're at $247. So it's a big difference, isn't it? Right? It's a big difference. So that's how you can use your data to see, okay, well, what's likely to happen? Well, you don't know what's likely to happen. You have to run this several times. I like to look at the first 85 trades, things like that. You can see after 85 trades, it looks like it's around 35 or 34,000 bucks, something like that. But let me show you something even better. I wasn't actually going to show you this, but I'm going to show it to you anyway, real quick. So this, now remember, we had our data here. We said 37% win rate and 3-to-1 reward risk ratio, and we were risking 0.5%, right? Well, what happens if we switch up the risk algorithm. What would happen if we were to do that? Well, I'm glad you asked. I'm glad you asked, because I'm going to share with you what this would look like. Instead of bringing it over from the other screen, 1 second. All right. Okay, here we go. We're going to plug in the exact same data, right? And I'll show you what it looks like. This is what we're going to do in the course, in the Small Accounts Big Profits course. We're going to use several different algorithms, but this is one of them. Okay, so, all right, so let's say that we're going to do the exact same thing, all right? You go, all right, I'm going to start with 20 grand to trade. I'm risking 0.5%, right? 0.5, and my reward risk ratio is 3 to 1. I got a 37% win rate, right? Okay, so now let's see what happens here. This is actually going to calculate it out for us. Well, this is wrong. This should be, yeah, there we go. It's actually still calculating. My computer's freaking out. Okay, there we go. All right. Okay, so it's a okay. So these numbers right here, I'll just highlight these. This is like the lowest balance. So even though it starts at 20 grand, it actually went as low as $18,200, right? And then it peaked out at 1.35 million. But let me show you what happens in this case. Remember, we were talking about how many, where are we at after 300 trades? So we'll go to trade 304 here, or to row 304, which will actually be trade 300 because we have 4 rows in the top. And we'll show you where we're at here. So here we're at $62,993, which is roughly almost double, I think, our best result before, right? Wasn't our best result 40 or something like that? Yeah. So when you change the algorithm, it completely changes your results. And remember, look, well, at the end of this, I'll just scroll down so you can see it quickly. But at the end of this, we're actually well over. So after 1,000 trades, it's actually, I don't think it actually is 1,000. Yeah, it is 1,000. Okay. So after 1,000 trades, we're at 1.29 million. And where were we over here after 1,000 trades? After 1,000 trades here, we were at 247,000. So that's the power of using a different risk algorithm, basically. And the lowest level of the account was 18,000. So again, you're still risking 0.5%. This is a different sequence of trades too. So it's not only the risk algorithm, it's also a different risk algorithm. It's also a different sequence of winners and losers. But the overall result here is you're basically making roughly 600% return. You made 247,000 here, and you made 1.29 million here, and that's the difference, right? So that's how that works. So I just wanted to share that with you as well. So the reason why I'm showing you all these numbers is they're all hypothetical. We never know what's going to happen in the future. The way that I like to do is run multiple Monte Carlo tests, and then you get a range of what's acceptable. The midpoint, the middle is kind of the average, what you might expect. You could be really unlucky and be down here, or really lucky and be up here. But the middle is kind of where you want to expect to be. And when you're trading, not only do you have to make sure your system works, which is the trader ratio, and not only do you have to make sure that your risk is right so you don't give up, right, which is the risk calculator, but you also have to say, okay, what are my goals? Like, what am I trying to do here? I know that I don't want to have a 20% drawdown. If I don't want to have a 20% drawdown, what's likely to happen? Like, how far can I go with this? How many years is it going to be before I reach my target goal? Or am I going to pull out money after I get to a certain level? Or what am I going to do here? So that's where these sorts of things come in handy. And so if this is something that interests you, I'll see you in the Small Accounts Big Profits course. You can get in there at fxjake.com/big. So you just type in here, I'll put in here, fxjake.com/big. That's where you'll get in. And again, we're going to see if we can get to 100 grand over 300 trades. So that'll be good fun. All right. So there you are. fxjake.com/big, actually. fxjake.com/big. That's the link right there. All right, guys. Thanks so much for spending time with us today. I wish you happy trading, and we'll see you soon. Take care. Bye. See ya. Bye.